Good morning, it's the 9th of December. I'm Joe Neighbour from Signal Centre, and today is the latest roundup on the FX charts for you all. So, just in terms of latest headlines and what's moving markets over the last 24 hours or so, obviously we continue to see worries over the Omicron variant, and we've seen some action taken by the likes of the UK government as a result of that, acting their Plan B, if you like, which has had a pretty significant impact on the price of sterling, which we'll come on to shortly. There has been some conflicting reports surrounding the variant with regards to obviously how transmissible it is and the effects of it as well. And that's obviously playing into the minds of investors and impacting risk taking. Sterling was undermined by a tightening of the coronavirus restrictions overnight, but sterling did recover from fresh 2021 lows, which we'll come on to shortly. Euro was fairly resilient, that advanced on the back of a weakening dollar. So let's get stuck into the charts. In front of you now, I have the dollar index chart on a daily time frame. And as you can see, I've got this bullish channel which continues to push higher. In recent sessions, we have seen some consolidation take place. I've got this 50% fib level, which I'm going to remove just so that we don't get confused by that. But we have seen yesterday this bearish candle form off the back of a bit of a shooting star candle a day previous. So what I'm seeing here is obviously some consolidation. If we see a break to the upside, then I'm thinking we're going to move higher in line with the dominant trend up towards our target of this 61.8% Fibonacci level at 97.72. If we see a break to the downside, so if we take out yesterday's low at 95.85, then more than likely what we are going to see is a continued slide to the downside towards this lower end of this bullish channel. We've also got some key supports around here at 94.80 and also a 38.2% fib at 94.47. So that would be a really nice area, I think, to consider replenishing longs on anything dollar linked. So at the moment, I am bullish dollar. I still think we're going to see higher prices, but in the short term, there is a potential for a dip lower towards that key level at 94.80 to 94.47. If we take actually a look at the intraday charts, because obviously I know a lot of people want to trade these things on a short-term basis. This is the hourly chart, and what we just saw in that triangle on the daily chart, if we zoom in, what we may be seeing here is the formation of a head and shoulders top on the intraday charts. This is the 60-minute chart. So we've got this big red line down here at 95.52. For me, that would represent the neckline of this potential head and shoulders top pattern. It is only a potential one at this stage because it needs to complete it before we can start calling it that. So let's just draw this up. So we've got a left shoulder here, according to what I'm seeing. Obviously, it's a very subjective topic, technical analysis, but just my eyes are seeing this today, and I think this could be something that people want to pay attention to. So we've got that left shoulder, we've got the head up here, we've got the neckline down here, and then this formation of a right shoulder. Obviously, that's a very sharp move to the upside. This more sort of rounded version of the shoulder is what I'm probably more interested in. And then we have that again back down to that neckline at 95.52. So we've seen a break of this bullish channel, or this corrective channel. We've seen a retest of that corrective channel, which has failed, and we've seen sellers step back in. And at the moment, we are, although bouncing from the lows that we posted yesterday, still got a bit of work to do. So I quite like the fact that this may be taking shape. And if we take a look at the measurement of this pattern, so from the head to the neckline projected lower, that will give us an indication of what we can expect on the downside as a target if this head and shoulders top pattern is to play out. So we'll be looking for a move down to 94.09. Now, if we go back to the daily charts, 94.09 is somewhere down here, so that would suggest that we're going to see maybe a break of this channel. But we do have some strong support around here. So ultimately, I think, I'd be looking for a downside target in and around this region on dollar index, but overall still remaining quite bullish. So obviously, once we see a nice red candle on dollar index, if we look at euro dollar, we should see the opposite. So yesterday we saw a big impulsive move to the upside. We're giving a little bit of that back at the moment. But what I said this morning on my morning video with regards to euro US dollar is that we have put in place a higher low. So it's very early stages, but we could be seeing a little bit of a consolidation here and some potential for a corrective move to the upside. 115.25 is the level I've got highlighted. It's this blue line here. which was previously a pretty good support before we saw that breakdown. So a retest of somewhere in and around here. We're not going to invalidate the long-term bearish trend, but we are going to get some value if you are looking on the short side to re-enter positions, or if you're long to maybe offload those positions worrying about the longer term trend, or you could be speculating from these lows on a bit of a bounce. So quite interesting potential there. And then finally I'm going to take a look at cable, because this continued to slide lower on the back of the fresh restrictions that the UK government put in place yesterday. As you can see, we've been trading within this bearish channel. We've broken down a number of supports without any real fight from the support levels or the buyers to really support the price. So what we saw yesterday was, really interestingly, a test of this 38.2% Fibonacci level at 131.65. Now, why is that relevant? Well, if I scroll a little bit further back on the charts, I'll go back to these lows here that we posted in March last year. So this was the low of the move. Then we saw the move up to the highs. We posted a double top, and then we've got this 38.2% fib level. Instantly yesterday we saw a reaction off of that level, so we didn't close on the lows. That was a fresh 21-month low, as I said, 2021 low, as I said earlier. We need to see more evidence of some buying support before we can get excited about buying this. I think for a very short-term reaction, you might be able to get some success on buying cable in and around this zone, but clearly the trend remains pretty bearish, so do be careful. We are so far seeing this 38.2% do a job, but if it fails, we're going to see prices slide off quite quickly, so do be careful. That's it from me on the FX front. I've gone on probably a bit longer than I should, but hopefully it was useful to anybody trading currencies at the moment, and I'll be back next week with a fresh roundup on the FX markets. Until then, goodbye.